stock buybacks, what are they and why should they matter to you? Yahoo Finance's very own Julie Hyman here to explain. Hey, Julie.
Hi there, Brad. So let's go through here the different factors that go into buybacks and the effect that they have. Starting with, why do companies buy back their own shares? Well, when companies have excess cash, they can make a number of decisions as to what they want to do with that money, including, for example, pay dividends. But basically what they do when they buy back shares is they will reduce the number of outstanding shares, and they end up canceling those shares once they buy them back. A company can't own its own shares in that way. So it reduces the number of shares outstanding. You reduce the supply of shares. In theory, that then increases the price for each shareholder. So that's kind of how the stock buyback works. In terms of why companies do these types of buybacks, first of all, it can be a signal to the market that the company views its own shares as undervalued here. In terms of benefits for investors, if the company is buying back its shares, the shareholder gets that money, so that's a benefit. But in addition to that, it can tend to boost the value for the shares. Now, reasons, again, that a company does one of these is that it can be a signal that the stock is undervalued. That's the signal that the company is sending. The company might want to do it because they have some flexibility in terms of the amount they're buying, when they're buying it. When a company does a buyback authorization, it doesn't mean that they're buying back that total amount of shares all at once. It means they are authorized to go up to that amount, but they do it at different times in the market when they think that the shares have fallen to a level that makes them attractive. So it gives the company some flexibility. There are some tax benefits to do so, and you also have some, sort of technical effects of stock options that then the company wants to reduce the number of shares outstanding here. Tax implications here, shareholders, I should say, do have to pay capital gains taxes on the shares that they sell back to the company, and then companies in turn has to pay a 1% excise tax on buyback. So that is sort of the tax implications that people have to keep an eye on. I should mention that not everyone is a fan of stock buybacks as a structure. There are some critics who say that while it may give a short-term pop to the shares, over the longer term, companies might be better off reinvesting that money in their businesses to do things like research and development, to build more plants, to hire more people, what have you. But it does tend to be a pretty popular move in the short term and does tend to support stocks over that period. Brad?